So at the end of February 2023, Heineken reported their recent annual report showing their new numbers for the year 2022. And in this annual report, they mentioned that they recorded a record level of revenue for that particular year, as well as a record operating profit and net profit. So what I wanted to do for this video is put this into my Excel sheet, see exactly how they did compared to the projections that we gave Heineken for 2022, and see whether or not we think Heineken is still a good buy at its current price range. So I already went through the effort of taking the numbers from their annual report and inserting them into a new 2022 spreadsheet. So what we can see here is that for 2022 they posted a record revenue of 34.5 billion euros, whereas the year prior to that it was 26.5 in 2021. But what we can also see here when it comes to that EBITDA, so that earnings before interest, taxes, depreciation and amortization, before any additional accounting gimmicks, we do notice that their EBITDA has been decreasing in 2022 when compared to 2021, even though their revenue is about 30% higher. So this does mean that Heineken saw a lot of additional cost in 2022, cost of doing business, because even though their revenue has been increasing, their margins have been decreasing. And I also went to the effort of putting the margin percentage here. We can see a 25% margin in 2021, which is massive for Heineken standards. Overall, they've always been around the 20% range, but 25% in 2021. Of course, this is because inflation was rising, and as long as Heineken still had stockpiles to sell due to inflation, they can sell at very high margins because they bought their stockpiles in 2020, 2019, and were able to sell it in 2021 when inflation was going higher, and they can also ask more money for their beers. In 2022, of course, this margin kind of shrank because they had to buy additional raw materials to start making their beers again. So we did see a massive hit to their profit margin in 2022. We also noticed that their debt has decreased a little bit, and so has the excess cash on their balance sheet. Their multiple in 2022 has shrunk, and their multiple in 2022 has also shrunk to 9.7, which is a record low here for the last 8 years. But I do think it's important to mention that this EV/EBITDA ratio is as recorded on December 31st, 2022, of course. So the price may be a lot higher right now, which it also actually is. So take this number with a grain of salt, but on the 31st of December 2022, they saw an EV/EBITDA ratio of 9.7 times and a net debt to EBITDA ratio of 2.1 times, which is well within the margin of safety that we like to see as a value investor. Moving then to their cash flow from operation, we see a very solid 5.6 billion of cash flow of operations in 2022, which is a record year for them once again, and a nice 10% increase from 2021 numbers. Of course, we also see an increase in their capital expenditure, because of course, as the price of everything rises, so too does the cost of future-proofing your business. So this is very much as expected, although I do think it's about a 25% increase here from 2021 to 2022. We also saw them pay back quite a lot of debt, 1.3 billion, which gave us a free cash flow in line here with 2021. The share count remained the same. Their free cash flow per share is also around the same number, but we did see their price per share drop to 88.26 euros on the 31st of December, like I mentioned. This gives Heineken a yield of 7.6%. So let's now take this spreadsheet as well as the spreadsheet for, let's see, what we projected. This one. So let's see exactly what we imagined they would do in 2022. With a 3% EBITDA growth, we expected them to have an EBITDA of around 6.9 billion, whereas in reality what we see, let's see this number, we saw an EBITDA of 6.4. So the EBITDA has actually come down from their 2021 highs, which is not what we projected in our forecast. Of course, it's not a vast difference, it's not massive difference, but it is underperforming what we expected them to do. And I think the same goes for their free cash flow as well. So let's have a look over at our free cash flow model. We expected them to have 7.06 and they had 6.72, which again is not a massive difference, but it is underperforming our expectations. So we gave them a 3% growth for the first 5 years and then a 2% growth for the last 5 years. But looking at their decrease in EBITDA here, we see an overall trend for the last 10 years of about 3%. And this number is including the massive inflation that we've seen as well. So actually looking at these numbers, I actually don't expect them to reach a EBITDA growth of 3% annually for the next 5 years. So what I'll be doing here is reduce their projections from 3% to 2.5%. So I'm taking the 2022 number of 6.4 billion and I'm growing that by 2.5% for the first 5 years and then 2% for the last 5 years. This gives me a EBITDA in 2031 of 7.9 billion, whereas previously I projected about 8.5. Now this is a difference of around 600 billion, which is mostly based on the change in future projection that we notice here from the 2022 annual report to the 2021 annual report. And as you can see, just a slight deviation from your projection can have massive implications for your share price 10 years down the line. Adhering to the same multiple of 11 times, this now gives me an enterprise value in 2031 of 86 billion euros and a market cap of about 75 billion, whereas previously we estimated it to be about 83 billion. So it's about a 8 billion difference. Divide this by the amount of shares outstanding, and they've been increasing by about 1 million for the past year, mostly due to share-based compensation. This gives me a share price 9 years from now, 2031, of 130 euros instead of 144 euros, which we projected with the data up until 2021. For the free cash flow model, I'm not adjusting that growth rate too much because we still see a growth rate of free cash flow of about 10% for the last year. So I do still think that 6% is a manageable number. I will use their 2022 numbers and not their projected numbers. So of course the numbers deviate slightly here. With the new projection, I estimate a free cash flow per share of around 11 euros per share, whereas previously I estimated about 11.5. I'm still going to stick a 7% yield to that, which gives me a stock price in 2031, so 9 years from now, of 157 euros and 57 cents, whereas previously I estimated 164 euros and 7 cents. So sometimes when you look at a stock and you notice that a certain investment bank has downgraded a stock price, they downgrade a stock price for the exact same reason that we're downgrading it right now as well. The financials for that year did not meet our expectations, and so we have to adjust our expectations and make a new guidance for the next 10 years. And this is also why we see a decrease in our guidance for Heineken 10 years down the line. Right now on the open market, I can buy as many shares of Heineken on the 28th of May for 99 euros and 56 cents. Taking both our projection of the enterprise value model as well as the free cash flow model, I expect a share price in 2031 of 143 euros. This gives me a compounding annual growth rate, so an increase of the share price alone as seen on the stock market itself of about 3.7%. But the moment that you include the free cash flow that we projected on this side and the free cash flow model, I expect an internal rate of return of 12.7%. I always say on average the stock market returns about 10%, so I think compared to the overall stock market, I expect Heineken to about perform in line with the stock market as a whole. But what happens if the price goes up or comes down a little bit with our new projection? I now expect the moment that the price comes down by about 30% to 71 euros, an IRR of about 17.2%. Having a quick look again over at our previous model, we notice that we expect a 17.2% internal rate of return at the 76 euros range as opposed to the 71 euros range, because of course they did not meet the numbers that we expected them to reach. They have been underperforming our numbers, and so we have to downgrade their stock a little bit. So this is it for Heineken and their 2022 numbers, a little update on exactly what they've been doing with their last annual report. Thank you very much for watching. Don't forget to like, subscribe and all that good stuff, and I'll see you in the next one. Cheerio!